London, Reuters, world shares rose on Friday but were set to end in the red for a second week running amid intensifying worries over the fallout of a trade dispute resulting from U.S. tariffs, while oil prices rose with an OPEC meeting underway. The MSCI All-Country World Index.MIWD 00000 PUS, which tracks stocks in 47 countries, was up 0.3% by afternoon in Europe but down 1.3% on the week, its worst weekly performance since the week ended March 23. Futures indicated a recovery on Wall Street after a sharp drawdown the previous day. Investor nervousness over a possible full-blown trade war has deepened this week over increasingly sharp rhetoric between the United States and China, and growing evidence of the economic damage such a conflict could produce. Chinese state media said on Friday that U.S. protectionism was self-defeating and a Euro symptom of paranoid delusion sa Euro that must not distract China from its path to modernization. Earlier this week, German carmaker Daimler, DiGN.de, cut its earnings forecast, saying tariffs on cars exported from the United States to China would hurt Mercedes sales. India joined the European Union and China in retaliating against US President Trump a Euro trademark tariffs on steel and aluminum, raising import duties on US almonds by 20%. A Euro with no negotiations in sight at the moment, our base case scenario is shifting to a further escalation of the trade conflict between the two countries, a Euro wrote analysts at Danske Bank in a note to clients. There is a risk of a further deterioration in relations on June 30, when Washington is due to announce a plan to restrict Chinese investments into the United States and limit exports of U.S. tech products to China, they added. Strong financial stocks and better-than-expected Eurozone Purchasing Managers Index for services helped drive a timid relief bounce in European shares. But the Pan-European Stoxx 600 and its Eurozone counterpart stocks were set for their biggest weekly loss in 3 months as the consequences of rising protectionism sank in, notably for the auto sector. EU. The strong PMIs also boosted the Euro equals D4. It was last up 0.4 on the day and was set to end the week higher by 0.5%. Against a basket of currencies, the dollar was 0.2% lower. Against the yen, the greenback gained 0.2%. It was modestly higher at 110.16 yen JPY equals EBS, below a one-week high of 110.76 scaled the previous day amid lingering concerns over the U.S. China trade dispute. A Euro or ETH potential for all-out trade war, European political risks and emerging market volatility remain potent factors that should contain dollar/yen within the current range, though the lack of downside over the last week or so suggests stronger underlying demand, a Euro wrote Robert Rennie, head of market strategy at Westpac. The European PMIs also showed manufacturing growth was the weakest in 18 months on trade worries. Elsewhere in Europe, Greece Euro trademark's borrowing costs fell to 4-week lows on Friday after Athens won debt relief from the Eurozone. Italian bond yields also fell after a top lawmaker said an exit from the euro was not part of the current government Euro trademark's plans. Sterling was 0.3% higher against the dollar, GBP equals D3, extending gains made the previous day after the Bank of England's chief economist Andy Haldane unexpectedly joined the minority of policymakers calling for a UK interest rate hike, citing concerns about growing wage pressure. OPEC agreed on Friday to raise oil production by around 1 million barrels per day from July for the group and its allies, an OPEC source said, although crude prices remained higher on the day. Brent crude LCOC1 was trading at $74.44 a barrel, up almost 2%. U.S. West Texas Intermediate crude CLV1 rose 1.5% to $66.52 per barrel. Earlier in Asia, MSCI Euro trademark's broadest index of Asia-Pacific shares outside Japan. MIAP J0000 PUS dropped as much as 0.35% at one point to touch its weakest since early December, before erasing losses to be up 0.15%. Still, it was 2.3% off for the week. Hong Kong's Hang Seng Chi plumbed 6-month lows, having lost 3.9% so far this week. South Korea's Kospi.ks11 hit 9-month lows, and in mainland China, the CSI 300 index. CSI 300 lost almost 5% this week to one-year lows. Japan's Nikkei.N225 gave up 0.8% for a weekly loss of 1.7%.